If you've been thinking about becoming a mortgage loan originator in 2025, then you are absolutely watching the right video. Let me take a moment and introduce myself. My name is Zevi. I'm an owner of a mortgage business right here in Los Angeles. I'm also somebody who originates both residential and commercial loans. And in this video, I want to talk to you for a minute about the options that you have as a mortgage loan originator. For somebody who is new and coming into the business, you might have not realized that you actually have two paths ahead of you, two completely different paths that are going to take you to two completely different places. Now, at some point in your career, you can actually merge these paths and take advantage of what's available on both ends. Now, I know this is something new and not something that you might have even considered. So what I would like to do is dive right into it. But right before that, if you wouldn't mind hitting that like button for me, simply because it will help other people just like yourself find this particular information on the web. And of course, if you like my channel, then feel free to subscribe. With that, let's dive right into it. So let's talk about it. What exactly are these two paths? As a mortgage loan originator, I thought that I would just be originating residential mortgages and nothing else, right? Not really. Let's talk about it. So the first thing, before you actually get into the game, I would say there's two things that I would keep top of mind. And number one, which I really don't want to dive deep into, is just the licensing piece, because you have to ask yourself, where exactly am I going to be working? Because if you're working at a bank, it's a completely different set of guidelines than if you're working for a shop that is either licensed by the Department of Business Oversight or by the Department of Real Estate. Make sure to ask that question, because the way you get licensed would be completely different, and the time spent would also be either more or less. Now, that's about as much as I want to spend on that. I want to talk about the meat and potatoes, which is you as an originator. As far as you know, you're coming into this game originating several different type of mortgages. And the bulk of the mortgages that you more than likely are aware of are the mortgages that require somebody to present a copy of their tax returns or their W-2s. And those typically are mortgages that are sold on the secondary market to like Fannie and Freddie Mac. Typically, these are national programs, so anyone walking into a local bank can apply for that type of a mortgage. And by doing that, you're basically just learning the ABCs of lending. Of course, it doesn't differentiate you from anyone else in the marketplace. So let's take it a step further. Bucket number two. There's something out there called non-prime or subprime or alternative documentation, non-QM loans. And that's basically every other type of a loan that's available on the residential end, and sometimes even commercial, to be able to offer somebody financing without actually using a copy of their tax return, right? So you'd be using alternative documentations like bank statements or a profit or loss, or maybe just straight income from the property to actually qualify a file for financing. And that is actually something that's typically not available at a local bank. So you could become a specialist in that area, and you would cater to self-employed borrowers, because typically they're the ones who don't necessarily generate a pay stub. Now they may, but a lot of times they don't. And what they do is they write off a lot of their expenses, and therefore they have a more difficult time getting qualified. But when you back in their deposits, then all of a sudden you see significantly different amount of income. That's another niche that you can go into. The last bucket, of course, is private money. Now, depending on where you work, you may or may not have access to doing these type of transactions, but they're readily available for people that will not be able to qualify in both residential, conventional, agency, all that bucket of Fannie and Freddie Mac. Number two, non-QM, alternative documentation, subprime, whatever you want to call that, loans that will not require a copy of your tax returns. And then ultimately, loans that are basically asset-based, meaning that you put down a chunk of money, like 30 or 40%, and you get a bridge deal, which is an investor writing a check against the asset of the property, and you having an idea of what you want to do with that property. Typically, it's a reposition, meaning that you bought something for the purpose of either flipping it for a profit or maybe it's not habitable, so you can't get conventional financing or even non-QM financing, and then you fix it up for the purpose of either retaining it as an investment property or selling it. These loans are structured for investment. Now, that would be the first road that you could take, maybe the first path. And you might be asking yourself, okay, so what else is available? I wasn't aware when I started the beginning journey of my career that there was anything else. And as a matter of fact, I started in a bank. So the programs that I started with, I was very limited to. Before I transition you to the second path, which actually is where I found most of the profits to be. Not that this is not a profitable path, but keep in mind that it all is market driven. It depends when you come into being a mortgage loan officer because the business is cyclical. It's based on where the market rates are. And if the market rates are not extremely favorable, meaning like today, 2024, right, November 2024, you're going to have a lot of relationships in place with real estate agents who are actually controlling the market today because there's not a lot of refinances, very few. Therefore, most of the business is based around purchase transactions, which means that if you don't have a pre-existing relationship with real estate agents and other professionals, but primarily real estate agents, you would have a tough time capturing the business. So that is something that we should definitely keep in mind. And if you wanted to test out the waters, even before getting your license, you could actually pick up the phone and see if you were able to establish some meetings, face-to-face meetings, or at least a conversation with some producers in your area, real estate producers. And I don't just mean anyone who hangs out by the water cooler, because there's no shortage of that. There's 120,000 licensed real estate agents in Los Angeles alone. So clearly no shortage of people with a real estate license, but there's a very small group of real estate agents who are actually producing. And the way you could find these people is very simple because you can go on sites like realtor.com and you could literally find a real estate agent in your area by just a click of a button. And with that, you could actually see their production. And so if you're talking to somebody who's just recently listed a home or recently sold a house or has paid for a territory within Zillow or Redfin or Realtor.com, meaning a zip code, you know that these people are taking their business very seriously. Now, what I want to transition into is what would you expect as a beginner loan officer in terms of, do I work with a bank? Do I work with a broker? Do I focus on agency loans? Do I focus on non-QM loans? Do I focus on private money loans? I had this question come up this week from one of my subscribers, and they asked me, do you think that being a part of a call center would be a good idea? Or do you think that that's not a reputable source and I should focus more on joining a reputable company where I could actually build my brand? This is my take on basically somebody who just wants to get into the business. I would say try to touch as many transactions as humanly possible. And as a matter of fact, if it was me coming into this business today and I knew nothing about it, if my focus was strictly on the residential side, then what I would highly recommend is for somebody to come in as either a coordinator or a junior processor to a team of people that are hopefully producing loan officers. And the reason is you will be exposed to a lot of different transactions and you will be able to learn more of as a helper to the loan officers, to the processors, how the file is put together. You'll see a lot of pitfalls and you will quickly start learning. You're much better off making very little money and being able to see all the mistakes that take place, understanding the guidelines. So then this way, when you transition from being a coordinator, a junior processor, a loan officer assistant, whatever it may be, to actually becoming a loan officer, then you come from a place of strength, a place of education. So that would definitely be my advice. And for this particular person, if you have an opportunity to join a call center, then I would say 100% go for it. And the reason is you're going to get a ton of opportunities to answer questions which you're not going to know the answer to, and you will have to find the answer, which means you're going to get educated in the process. I don't believe that that's the path one should take at all, and I'll tell you why. Because the only reason somebody would use your services is because you have developed a brand, and they want to work with you specifically because you have shown that you're very knowledgeable and they feel very comfortable working with you. And that, of course, takes a lot of time. It takes doing a lot of different things. As an example, you're sitting here watching me delivering a message to you, content, right? You're on YouTube. And this is one way for me to establish myself as an authority in the space of mortgage education. And you could do the same thing with videos, as an example, to real estate agents. But that would, again, take time. So that was path number one. I want to transition and talk about another opportunity that you didn't even know that you have. And that would be commercial and private money lending on this side altogether. And what do I mean by that? Most people think that you need to know everything about residential lending before you transition into commercial lending. And they actually get quite intimidated by the idea of, look, I'm coming into this business, I don't know anything about it. Why in the world would I go straight into commercial lending? Well, the truth of the matter is there is a lot more support when it comes down to commercial lending than there typically is in residential lending. There's a lot more pieces to the puzzle, believe it or not, in residential lending than there is in commercial lending. Now, mind you, you're working on commission. I don't know what part of the country you're at, but I can assure you that whatever residential piece of real estate you're trying to either purchase or refinance is more than likely always going to be less than a commercial piece of real estate. And the funny thing is, to try to capture a loan on this side, on the residential side, that is really big, you more than likely have to work with really experienced agents at a very high-end property, no matter which part of the country you're in. Whereas on this side, on the commercial side, every mom and pop transaction just looking to expand and grow their business would actually allow you to work on a larger loan amount, and that would be considered normal. Which also means that if I was charging 1% on this side or 1% on that side, my commissions would be a lot greater on the commercial side. And so you might have 1,000 questions now in your head thinking, who would even teach me that? Keep watching. Let me go through it for a second. Let's talk about the benefits. When you're on the residential side, keep in mind, we're in November 2024. That means that over the past several years, 2020 to 2022, a lot of this business, hence why we don't have refis, was locked up for 30 years in loans which have a rate of somewhere between 2 to 4%. Extremely difficult to capture any type of refi in this environment unless somebody is either forced to purchase or forced to refi because they have to get money out of the property. But mind you, that's probably 10%, very little. Whereas on this side, commercial loans are locked up for 3, 5, and 7 years, which means that this opportunity for a refinance is going to continue to open up whether they like it or not, whether the rates are high or low. It makes absolutely no difference because if they don't refi the property, they're going to have to sell it. So there's more opportunity on this side. In addition to it, if you're thinking about, okay, well, it sounds interesting, but where exactly would I learn how to do this? I've actually done both residential and commercial lending for a period of well over 10 years. And most of where I made a lot of the money that I make is still on both the commercial and the private money side. And what I've done over the past year is taken all my knowledge and package it into a program that I call the Part-Time Commercial Lender Academy. And it's actually available for you in the link description of this video, and you're welcome to check it out. And so I feel like for anyone who's just getting started in the business of lending, I don't think that you should shy away or overlook the opportunity that you have in commercial and private money lending. In private money, you could close deals in 1 to 2 weeks quite easily and charge 1.5%, sometimes 2% as an origination. That opportunity doesn't necessarily exist when you're working at a bank or just originating agency loans, all right? I've covered a lot of ground, and I know you must have a ton of questions. So if you do, please feel free to drop them in the comments below. I would love to answer them for you. It could be significant as to where you end up spending the majority of the time. And I think one thing that we didn't touch on is where exactly do you capture this business? Whereas right here on the residential lending side, you have to work with real estate agents. Of course, you can work with CPAs, lawyers, builders, developers, a bunch of people, but most of the business is going to come from real estate agents. Whereas on this side, because it's legal to pay another company to work together on a transaction, unlike this side would be illegal, you could actually work with other residential loan officers who have no idea what to do with commercial business, and therefore you can actually write them into your term sheet and have their licensed company paid through the transaction, all right? And that makes actually all the difference in the world, because now you have somebody who is willing to refer business to you, who's basically working in the same field as you, and you can use them as a referral partner, which is huge. It's amazing, all right? So again, Part-Time Commercial Lender Academy, available in the description below. Drop me any comments you might have. If you liked this video and you got value from this, please hit that like button. I do want other people like yourself to be able to find this information on the web. And again, if you like the channel, feel free to subscribe. With that, I thank you so much for watching this, and I'll catch you again on my next video. Take care.